Okay, so welcome back to another lesson of the price action trading course. So previously we've been talking about trends, the type of trends we have in the market, and how to identify the trend. We said in an uptrend we have higher highs and higher lows. In the downtrend we have lower lows and then lower highs, right? And then we spoke about the indication. The indication is the first hand that the market plays before anything else. Sorry about that. I think there's some noise in the background or whatever. I don't know what's going on. So today we're going to talk about the correction, right? The correction is very important because the correction lets you know when the continuation is about to start, that you can get onto the trend and then can make money off it. So without further ado, I'm gonna just share my screen. You know what it is? I tried recording. Um, I recorded one earlier, but it turns out that the screen wasn't even sharing. The screen wasn't even sharing, so I'm just making a new one right now. Okay, I think my screen is being shared. Okay, so I'm gonna just hop onto a new channel. Um, Gold. That's what I trade. I trade gold on the higher time frame all the time. Higher time frame is king. I keep telling you guys. Don't worry about the whole lower time frame, what's going on there. Don't focus on that. Okay, so let's say we have our chart, right? We have our line. So we have a line, right? And now this is what price was doing. So price was just chopping around this area here, doing this, not doing nothing, consolidating, not knowing whether it wants to go up or down, just moving sideways. Then we have a break. This break here is what we classify as the indication, right? So now that we've got the indication, right, on the higher time frame, so higher time frame, 1 hour and 4 hour. I usually use the 1 hour as a source right there, the 1 hour. Higher time frame, the 1 hour and the 4. So supposedly we have a break on the 1 hour, right? This is our indication. So I'm gonna just label this out so that everyone can follow along and then see what's going. So this break here, right, happens on the 1 hour. This break here happens on the 1 hour, right? So let's indicate the indication. It doesn't matter, it doesn't have to be a big break like this. It could be a little break, anything at all. So this is the indication, right? On the 1 hour, when price makes an indication like this, right, it has to have a pullback. It has to make a pullback, right, to high, that higher low in order to make that higher high, right? So now that price has made an indication on the 1 hour, on the 1 hour chart, this pullback is gonna just look like this. It's just gonna look like one candle like this, right? Back into the zone. Okay, so when price makes this pullback, right? This pullback on the lower time frame, because you're trying to minimize your risk the most, right? You're trying to minimize your risk the most, right? So on this pullback, I'm gonna just label this pullback. So pullback. So this pullback here, right? On a lower time frame, so on a lower time frame, I'm gonna just write this lower time frame here. Lower time frame. So on a lower time frame, what this pullback here is gonna look like, right? So I'm gonna do this, right? Stay with me. This is the pullback, right? This is the pullback. This pullback will look on a lower time frame, right? So 15-minute time frame, the 15-minute time frame, 15-minute. So on the 15-minute, right, this pullback will look like this. This is how it will look. This is how this pullback will look on the 15-minute. It will make a low, a high, then a lower low, a lower high, and a lower low, right? This here is known as the correction. This pullback on a lower time frame, this is a correction. So I'm gonna just label this correction. This is the correction. This is the correction, right? So how do you know when the correction is over? Because we know that now, when we're having a pullback on the higher time frame, have in mind, this candle here will just be one single candle on the higher time frame. But if you go down to the 15-minute time frame, it wouldn't look like a candle, just one single candle. It would look like a whole downtrend. On the 15-minute time frame, it will look like a whole downtrend on the 15-minute time. So what you want to see on the 15-minute time frame before you can take your buys, since you have an indication already, is you want to see price do this. If price made a low, a higher low, so a lower high and a lower low, you want to see price break above here, this previous low, this previous high, come back down, right? And then start to see on the lower time frames, you want to see a change of character. Because if price is making lower lows, lower highs, lower lows, lower highs, lower lows, and it fails to make a lower high, breaks above the previous lower high, forms a higher low, and now it's starting to build up bullish momentum. So what you would do, so let me show you. So if I put this pullback, right, to the zone, and now you have your continuation. So you have your continuation here. So this is it. So supposedly price does this, right? Comes back down and make that continuation. So your indication, your correction, right? And now your continuation. This is it. So ideally, this will be your trade. Your initial breakout join, right? Your initial indication level, where price initially showed you that it wants to be bullish from. When the market peeps its head back above that level again, you will just put your buy limit, your buys. So here, because this is where you had that bullish momentum from, you target the indication level and you keep your stop loss at the last higher low. And your easy 1:3. I hope this makes sense. I hope you understand. This is how you trade. You wait for your indication, your pullback, which is your correction, which you look for on the lower time frame. The lower time frame is a 15-minute time frame. So once you see price break above your original high level, your higher time frame level, you hop down onto the lower time frame, which is the 15-minute. You wait for the market to pull back, have this correction, show you that the correction is over, because now price is not making any more lower highs. Now price is making higher lows and higher highs. You take the trade and you just aim for your initial indication level, stop loss below the previous higher low level. And then there you go, your easy 1 is to 3. You can hold for much longer because you are trading the higher time frame. The higher time frame is not gonna lie to you. It's not gonna manipulate you or just do a whole bunch of nonsense or whatever. Because if indeed price wants to buy, it is gonna buy regardless. It is gonna buy, right? I just want you guys to get the concept well before we hop into the charts. That before you can see the candles move and everything, For example, let's say this is a 15 minutes. So I'm gonna go on the 1 hour, right? Example. So this is a fresh. So let's say, okay, cool. Right now, let me just clear this whole. Okay, so let's say, so right now, we have a level of buyers here, right? We had buyers sitting at this level, right? Price was coming down, coming down, coming down. It broke below. So here, this is your indication. So this level here, this is an indication. This is indicating to you that below this level, price wants to be bearish. So let me just put the arrow here for you. I hope you guys are following along. This here is an indication. Indication, right? This is an indication. Now, price, you can see how price went on that correction. An indication. Now, all of this, right, is a correction. So if I'm to go on the lower time frame, the 15-minute, my internet's kind of slow right now. So supposedly, I'm supposed to go on the 15-minute time frame, right? You can see how now price is making that correction. It's making that a high, a low, higher high, lower low, then price makes a higher high, then price is just going up, up, up. But now you can see how price is starting to build that bearish momentum. You can see price made a high, a low, a lower high, a lower low, lower high, lower low, a lower high, and now price on its way to make that lower low back below this level. So ideally, when price makes its way down here, right, and it's below this level, this previous level that I had this bearish momentum from, I will take a sell. So supposing this is the indication, right? All of this, right? Anything from here, or here, right, is a correction. It's a big, big correction. All here is a correction. All here is a correction, right? All here is a correction. The moment price gets below this level, and it sells from here to here, to this initial level, the continuation. Continue page. That is it. Simple 3 steps. Simple. This is it. So you have your indication level, because have in mind, buyers are sitting on this level. Buyers are preventing price from going any lower, right? But now, sellers take out the buyers, they create a new lower low, because this low is lower than this low. So this is a low, this is a low, and this is a lower low. This is a lower low, right? This is a low. So now price is on its way to make that lower high. So look, So this is the lower high. So this is a lower high. This is a lower high. Ideally, price is on its way to make a new lower low. Price on its way to make a new lower low. I hope you guys are following. You see? This is the whole blueprint. Because price was being held here by a level of buyers. Sellers managed to take over with this huge, big ass candle, right? Now that the candle is over, price is on its correction. It's on its way to be corrected. It's corrected. Now the correction seems to be over, so all of this is just making its way for the continuation down below. So that's it about the correction. The correction is just price breaking down in the lower time frame, waiting for the lower time frame to flip back bullish to go with the overall trend, which is the bullish trend that you identified on the higher time frame, right? So I'll just keep this up. You can just take a screenshot of this and then just make sense of it. I hope you understand everything. Because it's very simple. It's not that difficult. Price moves in waves. You know, it will make an indication, a correction, and a continuation. If price breaks above here, that means that now the trade is invalid. Now it's on its bull run, right? And vice versa. So yeah, I'm gonna catch you guys for the next one tomorrow.